There's an interesting trend with soy. On the one hand, we've got a declining attention over time. Less and less people are interested in soy, less and less views on YouTube videos, etc. But at the same time, soy becomes more and more important within all of crypto. So if you look at the market cap of soy relative to all of crypto, that tends to rise. So where's the discrepancy coming from? So this is not the first video on soy on this channel. I've published several in the past. And the very first video, published 522 days ago, outperformed the average video. So the average video is here in gray, and that particular soy video is the blue line. Now the recent video, published 18 days ago, just performed average. It did not outperform. So yes, there's still some attention on it, but it's not comparable to how it was 522 days ago. Yet, during the time, the soy dominance went up. So when we look at soy's market cap, we compare this to the market cap of all of crypto, soy became more and more important. Since January 2024 to today, the dominance went up by 272%. And we might be somewhat in a range in the last year. Now here's soy relative to Ethereum. There might be somewhat of a floor. In other words, soy relative to ETH could be cheap. And here's soy relative to Bitcoin. Again, medium term, there could be a support. Long term, of course, there is still some risk. The reason why the soy to Bitcoin chart doesn't look as great as the soy to Ethereum chart is simply Bitcoin outperforming everything else. There's so much money flowing in. So that's both from Wall Street, but that's also from the Bitcoin treasury companies like MicroStrategy, that Bitcoin tends to do better than the rest of the last months. It's probably going to continue for a while. But there's also something else to mention. Soy has more token inflation than Bitcoin. So it underperformed by 40% since May 2023. And here is the circulating supply over time. So we were at 500 million soy 2 years ago and grew all the way to 3.4 billion. There needs to be a lot of additional demand in order to cope with that supply expansion. Now the good thing is that in the future, relatively speaking at least, to the currently circulating soy, the supply won't grow as much anymore. Because yes, this looks like a linear vesting schedule. So while we had a multiple X expansion within a very short time frame, in the future, those 3.4 billion won't grow to 5 or 10 billion anytime soon. Yes, there's still supply expansion, but it's not that much of a deal anymore compared to what happened in the past. And so soy was able to somewhat keep up with the supply expansion. It still underperformed Bitcoin, but not by massive amounts. Since now the supply expansion slows down, can we potentially, with growing demand, with growing usage, now outgrow Bitcoin? That's the central question. Now this is soy's total value locked over time. So how many US dollars are on the chain? There is some volatility, but overall this looks very nice. Now unfortunately, there is a lot of volatility in the soy token itself. So if we measure the total value locked in soy, we had a not so pretty development in Q4 of 2024. But since the beginning of the year, soy is starting to get more usage again. Now besides the spot market, besides the long-term holders, there's also the short-term bets on the price via perpetual futures, via leverage. And that money comes in and out of tokens very quickly, and it does impact prices. Have a look at the trading volume on the spot market in the last 24 hours. That is led by MEXC. There were 50 million of trading volume. And compare this with the perpetual futures market, where there was 2.5 billion of trading volume. Soy is one of the most traded tokens on the perps. It's got an open interest of 1.2 billion. Measured in open interest, it's the 7th most actively traded token, while at the same time, it's only at place number 12 in terms of market cap. So there's above average interest with short-term perpetual futures. And most of those traders are betting on rising prices. So the financing costs are positive. The longs have to pay the shorts. Most people are betting on the price to further appreciate. And so have a look at the correlation of the open interest on soy relative to the spot price. So the open interest is in green, the spot price is in yellow. Whenever more people bet on the price itself tends to go up. Whenever the perpetual futures deleverage, the price tends to bleed. And currently, we tend to rather see a deleveraging again. The price always moves in the direction to maximize liquidations, right? This is what market makers do. They want to get as many liquidation fees as possible. So the longs and the shorts get liquidated to similar degrees. Now, what is the likelihood of outperforming Bitcoin by buying an altcoin and holding it for 1 year. So let's say we are in a bull market, let's say Bitcoin went up. How likely is it, let's say we pick an altcoin in the top 100, that we're actually going to do better than just buying Bitcoin? We would expect that likelihood to be above 50%, right? Because when the market as a whole is going up, the altcoins are smaller, right? They should be more volatile. They should go up even further. So probably more than half of the altcoins should go up when Bitcoin went up as well. But here's something you don't see other crypto YouTubers talk about. What we've got over here is the top 100 altcoins in terms of market cap. And over here, we've got Bitcoin. And we can count the number of altcoins in the top 100 that did better. It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. There were 18 altcoins that did better than Bitcoin, then there's Bitcoin itself, and there's 81 altcoins that did worse. So during a time when Bitcoin went up by more than 50%, more than 80% of the altcoins did worse. So again, here are the better performers, here is Bitcoin, and here are all the altcoins that did worse than BTC. Now let's have a look at the altcoins that are smaller. So not in the top 100, but from 101 to 200 in terms of market cap. How many altcoins performed better than 51.8%? We've got 1, 2, 3, 4, 5, 6, 7. 7 out of 100 altcoins in that lower tier performed better than Bitcoin. 93 did worse. Let's go another tier down. So this is now the altcoins from 200 to 300. There were 1, 2, 3, 4, 5, 6, 7, 8 altcoins that did better than Bitcoin and 92 that did worse than BTC. In other words, just because the market is going up doesn't mean that the altcoins are outperforming Bitcoin. Most of the time, even during a bull market, the vast majority of altcoins is doing worse, and there's a good reason for this. The first reason is interest by retail. There are fewer and fewer retail investors speculating on crypto, and there's more and more money flowing from Wall Street into crypto. Now, Wall Street doesn't buy the altcoin that is place number 400 in terms of market cap. Wall Street buys Bitcoin and Ethereum. The time to speculate with altcoins is when a lot of new people enter the space, when the number of search queries is going up. Have a look at the social metrics. This is the altcoin daily channel. The number of views is close to all-time lows. Here's the number of newly gained subscribers on Crypto Banter. Here's the number of views on Coin Bureau. And so the riskier parts of the market tend to shrink. For example, there's the pump.fun ecosystem, right? The launchpad of meme coins on Solana. The fraction of trading that happens through pump.fun tended to decline. We had our initial expansion, but since November of last year, less and less of trading on the Solana chain is pump.fun related. The Bitcoin dominance continues to go up, and historically it only went down when it was close to 70%, potentially even higher, 72, 73%. When Bitcoin dominance is going down, that means the altcoins are outperforming. But this is not happening since September of 2022. It's the Wall Street money that currently supports crypto prices, and mainly Bitcoin and Ethereum. The fundamental reason why altcoins tend to do worse than Bitcoin and Ethereum most of the times is tokenomics. It's unlocks of supply, it's the early investors getting paid out, it's the team getting paid out, and it's the demand for the altcoin not growing to the same proportion. Have a look at this here. This is IMX or Immutable X. It had massive increasing supply over time. And so there's no surprise that IMX underperformed Ethereum by 86%. Now this is a logarithmic chart. Here's the same thing on a linear chart. Now have a look at this. This is SAY network. It went from 1.8 billion SAY to currently 4.3 billion. So the supply 2.5x'd. And of course the demand doesn't grow as quickly. And then we see an 80% underperformance. That's then a very common development. Or over here, we've got Arbitrum. It went from 1.3 billion tokens to currently 4.3, so more than a 3x in supply. And again, Arbitrum relative to Ethereum underperformed by 85%. And those kind of charts are not cherry-picked, right? Again, the vast majority of altcoins underperforms Bitcoin and Ethereum most of the time, even during a bull market. And that's because of the token inflation. All of the insiders and early investors, the VCs, they make money when this is going down. But we can also make money when this is going down. We do not have to be a venture capitalist or an insider or a Web3 developer in a crypto team. Instead, we can make money from those relative valuations by using decentralized finance or by using perpetual futures on decentralized finance perp exchanges. What you're seeing over here are tutorial videos of the premium membership. So the link is down below. It's thebitcoinstrategy.com. And so I like this strategy a lot during this current market environment. If retail interest suddenly spikes up again, right? If the social metrics go up, if the views on YouTube go up, I will notice this very quickly. And then it might make sense to buy the small altcoins again. Currently, we are not in that market. Why not take advantage of Bitcoin dominance continuing to climb while all of those insiders make money with the token inflation and while all of those tokens tend to do worse? We don't have to find the needle in the haystack. We don't have to find the next Giga token or the next Oxycoin or the next Cheems. We can just bet on all of those other tokens doing worse. We can basically flip this chart. So instead of losing 90% of the time, we can win 90% of the time. It sounds unrealistic, but it's really true, right? Just flip this chart. If you bet on falling prices during times like this, you're making money. And of course, I'm also sharing my own trades. So here's one from April 30th. Of course, I'm not sharing the most recent trades, but here is a trade where I shorted the Trump token. So that was the chart at the time. And then afterwards, surprise, surprise, it tend to go down because the Trump tokenomics are very bad as well. The supply increases very consistently. Or have a look at this. This is WorldCoin that I shorted on May 23rd over here with this chart. Again, I'm sharing this directly in premium in a dedicated channel, the Gerhard's Trade channel. So this chart turned into this chart. We are close to all-time lows. This WorldCoin trade specifically was very nice for the community. Just have a look at all of those copy trades. If you have proper risk management in place, you can make very nice percentage returns as well. I started with this strategy on the Hyperliquid platform 2 months ago. We are now at 9K unrealized P&L and we are betting on relative valuations. So we go long Ethereum and we go short many altcoins. And again, we can have the odds in our favor. This is also psychologically much easier than trying to find the next 10x token. First of all, it's very hard to make a 10x in this market, but also when you're trying to get that much into risk, then it's impossible to not have losing trades. So there will be a lot of losing trades to then have hopefully one trade that makes up for all of the losses. But the issue is with such a strategy, we can't deploy a lot of our capital in a single bet. We've got all of that volatility with that strategy, so we can only bet a few hundred, a few $1,000s. But once we've got a strategy that outperforms more consistently, we can dare to deploy more capital as well. We are not hoping for the big breakthrough. Instead, we are constantly growing our capital. And we do this relatively quickly if we use leverage in the right way. Again, we don't want to over-lever. Of course, we don't want to get broke. But if we hedge ourselves against the general macro environment, the volatility isn't actually that big. So if you're considering to revamp your strategy, if you potentially made gains first and then lost it all, then maybe it makes sense to learn about these things. There is the premium membership. It's currently $125 per month. You will lock in that rate. So once the bull market comes back, I will increase the price back to $165. But if you're now subscribing, you get the $125 and you will not be affected by the future price increase. If the size of your portfolio justifies also to invest in a one-on-one call, then feel free to sign up for the yearly, not for the monthly subscription. You also get a discount of $250 per year. But again, there is the 1 hour Zoom call where you can ask me anything and where you can have a look at your assets, not just at crypto, but at asset classes in general. Now you should see a link to Premium directly appearing here on the screen. When you click on that, you will land on the sign up page. If it's your first time over here, feel free to subscribe. I publish these regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.